Well, I thought this was a Snap quarter. Snap disappointed people last week, and Facebook just did too. I'm struggling to recall the last time that Facebook missed revenue and lowered revenue estimates like this. The good news is, however, that unlike Snap, Facebook management told people about this IDFA, this Apple risk. They've been talking about it for a year, and then the stock got slapped down because of that, slapped down because of the Snap results. And so the risk reward wasn't nearly as positively tilted as it was for Snap, and that's why the stock's flattish in the aftermarket. The fundamental trends are weak, though. This is not, I'm sure, not what Facebook would like. And I think the number one action question for investors on the call should be, what's the solution to how do you replace the signals that you and marketers got from Apple and IDFA? There are ways to do it. I'm sure there's going to be a solution. There's so much at stake here. How long is it going to take to come up with a solution, and how are you going to do it? That's the number one question on the call.
What are you getting? What did you get from Snap and others as far as how long this issue lasts for these companies?
I'm not sure anybody really knows. My guess is that this is something on the order of 2, 3, 4 quarters to solve. It may take that long until they can replenish or get back the signal that advertisers got. And this is only for certain types of advertisers, but those advertisers are heavy on Facebook and they're heavy on Snap, which is performance-based, mobile-leaning, mobile-solely, mobile-exclusive advertisers. Those businesses are losing. They're getting less of a return on their advertising spend. Now their ROAS, return on advertising spend, has been declining because of these privacy changes. They need to come up with a better solution. They need to come up with another solution. I think it's that'll take that long, 6 to 12 months.
Ed, a conference call, not typically a place you hear management respond to some of their critics on what we have all been talking about for these last few weeks, namely the impact of Facebook's platform and Instagram on so many different demographics, frankly, in our population in a negative way. My sense, perhaps, I'm curious to yours, you think Zuckerberg wants to talk about the metaverse and nothing else?
I think, first of all, is anyone going to ask him about the controversies? That's the first question that I have around that. And even if he is, I think you're right. I think he's really going to stick with this whole metaverse narrative, which isn't just words anymore. They're actually going to be splitting out their reporting to sort of reflect that, which I think is actually the most interesting thing here. And I think it explains a little bit this sort of 2% pop you're seeing. I mean, it's out of the Google playbook where, hey, we've got moonshot efforts over here where we're going to grow. But meanwhile, our healthy margin business over here, you'll still get to see what that looks like, without it sort of being mixed up in this sort of big new business we're entering. I also think this reality, this metaverse thing is their reaction to basically the iOS change. They don't own a platform. I mean, they realize just how vulnerable they are to being on someone else's platform. And so the metaverse, whatever you want to call it, whether it's some kind of version of these Oculus headsets that they're selling, some lighter version of it, they clearly want to own a platform. And I think that's the direction that they're going in with this sort of Facebook Reality Labs. And if they're going to win, if they're going to sort of continue to charge ahead, they need that part of the business to really take off, to sort of ground them. And I think that's where, I don't know, if there's positivity, that's where the positivity is coming from.
What do you think, Mark? How big of a business is that? What are the growth expectations from investors?
Well, I completely agree with Ed's first point, which is this is just like Google other bets. Let's see what the core profitability is like. I mean, we put out our own estimates on how much they're spending on virtual reality. We think it's something like $5 to $6 billion. We don't know. I think we're ballpark right. We'll find out next quarter when we get this disclosure, and then we'll see what's happening to the core business. My guess is that what investors should want to see is that actually Facebook is under-earning, i.e. they're investing so aggressively in new initiatives, which they should be doing, but it kind of masks just how profitable the core business is. And that would turn out to be a positive catalyst for Google, over the years when they first did this disclosure, and then they disclosed the losses behind cloud computing. Investors want that kind of visibility into the business. So that's one thing. And then metaverse, I don't know. I'm intrigued by what they could do. I also, when these big tech companies come out, they should have what I call long-term option value. That's one of the reasons long-term investors stick with them, because they have that. Google's got autonomous. I think Amazon's got robotics and logistics and probably a few other things. And I want to know what Facebook has under the hood. I think I know what it is. We want more detail on it. So I think it's a good thing that they have this option play. I think it's much broader, though, as an investment beyond just Apple privacy changes. Although Ed's right, to have your own platform is much better than being reliant on somebody else's.